We talk about balance here every day, about how important it is to help manage risk.
It's so important for us that we get that balance right, that we establish the proper asset allocation, because ultimately that's what's going to drive return.
A balanced portfolio is a portfolio that's going to have money invested into a variety of asset categories.
Part of your money that's working for you for growth, and another part that you have there for safety.
Assets that are intended for long-term, as well as assets that are intended for short-term needs.
It's really about risk management.
What balance provides us is some assets in the portfolio that may be going up while other assets are going down.
Giving you the courage to hang in there even when times get tough.
The reason that balance is so important is because there are so many things that are outside of our control.
As advisors, we need to be humble.
Humility is that thing that allows me to know that I don't know, you know?
No one has been able to successfully forecast all of the downturns in either the stock market or the bond market.
We may have an opinion and we may be pretty good at calling some trends, but all of a sudden, out of the blue, something can come totally unexpected.
The meteors from outer space, the things that really are outside of our control that can have such an impact on portfolios.
If you're not properly balanced, when the unexpected occurs, you can really suffer.
When the market sells off, fear takes over and investors tend to sell.
Probably doing it at the worst possible time.
That's the classic investor mistake.
A balanced portfolio should be able to weather any kind of market storm.
Balance provides peace of mind. It manages risk through diversification.
Different components of a portfolio have different risk characteristics.
Higher risk assets have the potential for higher return.
Generally, that's equities, and that's going to be money that you're not going to need in the short term.
That part you can handle a little more risk and volatility.
The balance to that is your bond portfolio.
Bonds in your portfolio are for risk reduction.
Bonds have lower risk and a lower expectation for return.
That's going to be your everyday money. It's there for you when you need it, regardless of what's going on in the markets.
Balance is generally thought of having balance between stock money and bond money, but it's really much more complex than that.
You know, building the asset mix between stocks and bonds, but also within bonds or within stocks themselves.
Large cap, mid cap, small cap.
There's domestic versus foreign.
How much do I have in value? How much do I have in growth?
Proper amount of bonds and bond duration.
Government bonds, corporate bonds.
Sometimes municipals, if your tax bracket warrants.
The combination of how that all comes together is the personal nature of building a custom portfolio just for you.
Just because you have a balanced portfolio doesn't mean you won't exhibit some volatility.
Balance is dynamic.
Your portfolio is not set and forget.
Things can get out of balance.
You bring it back by selling some of those things that have gone up more than others and buying those that have not done so well.
Buying loans, selling at a high point.
So balancing in the first place gives us a target. Rebalancing gives us a way to get back on track.
The subject of balance is a little bit different for each investor.
Every investor needs a properly balanced portfolio, but every investor's objectives are not necessarily the same.
You'll feel you have a perfectly balanced portfolio when you're making as much money as you can without taking too much risk.
Whether the market's up or whether it's down, emotionally, you're okay with it.
Balance isn't just about hitting that last home run or scoring the winning run. It's about what you do for the whole game.
What it does for you is it helps you sleep at night when it gets a little crazy.
A well-balanced portfolio is also going to give you the kind of growth longer term and the kind of safety shorter term that everybody desires.
Really, when you talk about balance, it's about taking half your money and growing it, take the other half and behave yourself, and in the end, you'll never get yourself in trouble.